Hi, everybody. This is Dan Sheridan. Welcome to Friday, day after St. Pat's Day, March 18th. And we're around lunchtime. Let's take a look at the market. We've got the SPX on the verge of kind of breaking out a bit here. You've had a good 3-day rally here. Again, if we just focus on the last little over 2 months, this is a 1-year price chart in SPX. Let's just focus on the last, let's say, 2 months and 2 weeks since about January 4th, the beginning of the year. We started with this 10% correction, spice it up a little bit with the Russian-Ukraine stuff. And we've had kind of a choppy range area and going on, right? So we've been in this kind of downturn really about 10 weeks. And when you think about it, if you remember back to the COVID correction, which was down 30%, after 5 weeks, we started bottoming out and coming up. So here, even though we're only down, I think the lows on Feb 24th here, down maybe 12% off of the January 4th highs of 48.18, we've been in this down area for a while. And some of these reversal numbers people are looking at, if we close over, anywhere from 44.08 to 44.16 today, right? And we're already at 44.30. It's kind of a bullish, that we could be coming out of this funk, this down move. Couple that with the 200-day is 44.70 and another 40 points. So I think how we close today is important. Throwing a little bit against that, if you look at, I think like 5 of the last 6 Fridays, we've been down. And I think a lot of it has to do with the Ukraine, Russian stuff. So we'll see today, right? But a couple things I'm looking at. Again, VIX has come down quite a bit, which is normal with once the news came out with the Fed, big surprise, right? We're going to raise the rates. Everybody knew it, but that was kind of, I think, holding the VIX up a little bit. Now the VIX is down. It's still relatively high, but it's in the 24 level. So again, for us, kind of this similar strategies we've been doing lately, short Vegas strategies, kind of range bound strategies that would benefit if volatility comes down, put credit spreads, butterflies, and iron condors. 2 I'll look at today would be iron condors. And again, we've been in a range. I mean, if you asked me, does it get better than that the last month? High volatility, VIX at 30, and you have a bit of a range. It was very good for range-bound traders because of the high premiums. So anyways, couple dialing into strategies. The first one I'm looking at would be a vertical. This would be in the SPX. I'm looking at April 14th. What's that, about 26, 27 days out? And I'm looking at sell the 41.70 puts and buy the 41.60 puts. And as the VIX is higher, again, it's not really high right now. It was at 30, around 24. You're still getting a halfway decent credit and some room, right? So if we're 27 days out and we're currently at 44.30, your short strike is at 41.70. So you're still getting 260 points out of the money. All right. When VIX is like 30, you might get 300, 320 points out of the money. So you're getting less room, but you're getting a lot more room than if VIX was 18. And then from a credit, when VIX was 30, you might be getting on this type of a trade. I'm sorry, this is a 10 wide trade, 10 wide. So the credit is around $1.40. I'm sorry, I was looking at the iron condor credit. So we're bringing in $1.40 credit, get about 260 points protection. Our risk is the difference in strikes is 10. So about $1,000 less 140, get about $860 into this. And with a credit of $1.30, that's pretty good. And so, and we're just, our deltas on this trade are about 0.71 deltas long. So it's not like a real bullish position like a covered right or a long diagonal, which is a poor man's covered right. That's why I like these put credit spreads. And the other thing is you only have risk in one direction, right? Now, an iron condor, on the other hand, right, if you take, okay, now we do the put side plus the call side, right? So that would be an iron condor. And again, we're looking at April 14th expiration. So we use the same side we did in the puts, 4170, 4160. So you say, so now let's look at the call side. And so now I go up and I sell the 4690 calls, 4,700. And let me just click on this iron condor. So you can see this is relatively equidistant in terms of, if you look at where the SPX is, 44.32, and you look at where your short put is, 41.70, and you look at where your short call is, 46.90, relatively kind of equidistant in the middle there. Now, the advantage of doing an iron condor, you get 2 credits, so your margin is going to be less. On the credit spread, we're bringing in about, let's say right now, it's near $1.40 credit, and it's a 10 wide spread. So our margin or risk is 860. And that's on the put credit spread. On the iron condor, you're bringing in a credit of about 240, and you have 2 10-point credit spreads. So it's $1,000 of risk less 240, so that'd be 760. So you can see in the iron condor, the advantages are you get 2 credits, so you get a higher credit, less risk, higher yield, and it's relatively neutral. But just for a little bit long delta, the advantage of the put credit spread is one good day up, we can get it off. There's no risk on the upside. And so that's kind of the way what we're looking at. Again, I continue to think that as we rally up here, the VIX should drop some more. But either way, I think at VIX 24, still a little bit in the upper end of the range. I would favor these type of trades in this market. So there's a little something we're looking at. Again, SPX is at 44.32 up 20. Definitely, I think if we close here, quite a bullish sign here. Have a nice day, everybody. Check out our site, SheridanMentoring.com. We have some new on-demand classes, which are a deep dive into certain strategies. We're releasing, I think this weekend, one on Iron Condor that I did, and one on ratio put back spreads, which are a nice strategy when you're expecting some good moves in the market. And Mark Fenton did that, along with our popular conservative plan to make 3K monthly and 25K, which we started in June of 2021. And we're next week finishing up our March. And even with the turbulence in the market, I don't think we've had a losing trade in our March class yet. So we're doing well in the March class, even amongst the turbulence. So check us out. Enjoy the weekend, and we'll see you later. Thanks.